Boom. Back in action, baby. We have an action-packed agency therapy today. I'm so stoked for it. Kurt, you're in that intro video like 2 or 3 times. I
I
don't know
feel
if you ever
feeling
knew.
kind of special right now. I'm not gonna
Yeah,
lie
I
to
don't.
you. I like
Have you ever seen that before?
maybe like shorter cut downs of it.
Yeah, for sure. Yeah, it's that classic agency therapy intro. You gotta love it. You guys, welcome back to a little agency therapy. We're stoked that you guys are here today. Thank you for investing your time, energy into our content. At the end of the day, we know that your time is important, and you guys could be doing a lot of other things right now. But you're here with us instead, and we appreciate that. For those of you that don't know, Nicholas Kirchner is my partner in Hydra, and super stoked to have him here today. This is essentially the glue that holds the business together right here. And my man is going to talk with us today a little bit on finance. We did a finance workshop with our clients last week, and I was like, dude, we have to bring this to agency therapy because it was so good. And this is content that I just don't think people post often because one, I'm not gonna lie, it's a little bit more dry, but it is the critical important information that I think that we all need to hear and we all have to take note of because these are the things that really make a operation strong, and you feel confident as a founder and owner of a business knowing that your financials are in check and there's not that stress looming over you month over month that your finances are going to be a mess, or you don't know where cash is coming from, you don't know if you can even make payroll, right? And we've all been in those shoes before, but if you have a really good financial system, you guys don't have to worry about those things. So, Nicholas, welcome, man. Welcome to Agency Therapy.
Thanks for having me, bro.
It's been a while since you've been on, to be honest.
Yeah. Last time I think we just riffed. We
We
didn't
just
really.
riffed for like an hour
Yeah.
straight, and that was a banger too. But I'm excited. We're going to be a little bit more poignant in our topic today, talking agency finance, and yeah, man. I guess like to start it off and like to like really bring a question to the surface is like I feel like agencies probably make some common mistakes in finance. Let's start there. Like, hey, common mistakes, common pitfalls for agencies when they're kind of just getting started. Because here's the thing: is like I feel like agencies have like this tipping point, and all of a sudden they're making all this money, they're generating all this revenue, and they're like, well, damn, I've never managed this much cash flow before. I've never managed this much revenue before. So give me some like common pitfalls, things that you guys are, or that we're seeing on our side, of course, and then from your experience as well.
Yeah. So first thing, especially with smaller agencies, right? You're starting to get up 30, 40, 50, 60, 70K a month, right? And a lot of us got into this business because we wanted good cash flow for ourselves, or we think of agencies as cash flow businesses.
They're cash flow monsters, dude. It's
Yes,
great.
and absolutely can be. The problem is we treat our agency's bank account as our personal bank account, and that's shift number one, right? There's, of course, things that you can be expensing to your business, and that's all fine and dandy. But at the end of the day, we want to make sure we're actually operating the business out of our business accounts and our personal lives out of our personal accounts as much as possible. And that brings me to my next point.
It's funny how much though. It's funny how much we see that of like, oh yeah, like I don't even have a business account. Like I've got I've got
Yeah,
a
yeah,
personal account that I'm running this through. And I'm like, oh my gosh,
yeah.
help.
Like, or the company credit card is like the only credit card you have, and just like everything's a write off, right? Um,
Yeah.
so that's one thing. The next thing is actually paying yourself as both an employee and as an owner of your company,
Hmm.
right? We think of our businesses as, oh, we're owners, so we just take profit
Yeah.
distributions, like whatever's
Distributions.
left
Yeah.
over is mine, right?
Hmm.
And the reality is you should be paying yourself a salary out of the business, and also taking dividends from the business in the event that there's profit.
Hmm.
And a couple of reasons. I'm going to speak more broadly because you're going to want to talk with your CPA specifically on what's best for your tax situation.
Yeah.
But typically, it's better to be paid a salary and then take distributions as well versus just distributions, as those are going to be taxed differently from one another. So, also, if you left the business, you would have to hire someone to come fill your seat, right? And depending on your entity structure, it has to be a reasonable amount that you would hire someone to come take your spot for.
Yeah.
So keep that in mind and really try and get yourself on the payroll, because it's a more accurate way of looking at your business, because there needs to be an operator or a CEO role in the business. And then also look at taking distributions separately
Yeah.
as well, right?
Yeah, and our CPA talked with us about that when we first like set up our entity and talking about reasonable compensation for your position. Which it's funny because like reasonable compensation sometimes is like much lower than you think it is.
So subjective.
Yeah, it's so subjective, right? So it's always interesting hearing other people's perspective on that.
Yeah, yeah. You're trying to make the argument CEO should make 36K a year.
36K a year, it's fine. It's fine. Like no, like that's how much they should make, right?
Yeah, yeah, it's hilarious. So, that would be another thing, and then, last one on, like, the super common ones is cash versus accrual accounting,
Mm,
and cash accounting is really the most common, most simple way of accounting. It's whenever I get paid, that gets recorded on my P&L. Whenever I pay for something, that gets recorded on my P&L, right? But that can cause some problems for us down the road if A, we ever want to sell, or if we're just trying to look at our trajectory of revenue over time. Depending on how you're paid and if there's late payments or things like that, your revenue is going to look way more like a wave than a parabolic curve, right? And the reason for that is with cash-based accounting, like I said, it's only recorded when money changes hands. So what we want to do is transition our agency to accrual accounting, which is the more accurate way of reflecting what's actually happening within your agency. So for example, the payment is recorded when I send the invoice, right? So
yep.
for example, I invoice a client, that's recorded as revenue today, regardless of if they don't pay it for 30, 60, or 90 days,
Yep.
right? Because that is an accurate picture of when we're earning that revenue. Same goes for paying expenses, right? I may receive an invoice for something but not pay it 30 days from now. Well, it still makes sense that that expense is falling in this month, so
Mhm.
I can get an accurate picture of my finances, right?
Yeah.
Versus when it's paid. Because
Now what?
otherwise it just doesn't make sense with my operating activities.
Yeah. Now what happens if someone never pays an invoice, right? Say someone like drops off.
Yeah. So then that's going to go into bad debts, and you will have to go back and reconcile
Mm,
that revenue, but also you're going to get a tax deduction there,
yeah. Okay. Cool. Cool.
depending on where you live, all that stuff. Um, it's basically writing it off as a bad debt.
Yeah. Okay.
Revenue you never earned, basically.
Yep. Yep. Makes sense. Makes sense. We got Michael Schreiber in the building. He said the boys.
No
I
way.
love it. He
What's
said,
up, Michael Schreiber?
I
We
know
need
it's
to
been a
play some
minute.
golf soon, my friend.
Yeah, I forgot he's in Denver. He said the course is crashing right now. That was a thumbnail. It says crash course on it. Um, and he said he's eating hot Cheetos right now. He's just vibing.
We love that.
I love it. Good to have you here, brother. Cool, man. Well, take us down the rabbit hole a little bit more. I know we did this hour long presentation, so I know you got some juice to talk about today. Take us down the rabbit hole.
Yeah. So one of the other things that every agency should get in place, especially among partners, a lot of partnerships fail because of lack of clarity and transparency around financials. So, how do you fix that? Well, at a minimum, if you're the CEO, you should be looking at your financial statements monthly. I look at our bank accounts daily, sometimes multiple times a day. Like, there's not a moment where you could ask me what we have on hand and I couldn't tell you,
Yeah.
to be honest with you. And that's how intimately you want to know your numbers, right? Because knowledge is power in this case, and you can actually make better decisions if you know, okay, we're good, or we need to be less aggressive, more aggressive, etc. And as a leader, at the helm steering the ship, you need to know what that looks like. So meeting on your financial statements, reviewing your financial statements at least monthly. Now, what are the statements we want to look at? The P&L, or the income statement, as P&L is more of its like common trade name you hear thrown around. So just know income statement and P&L are one and the same.
Profit and
Your
loss
balance
for
sheet.
those that don't know what P&L means. I feel like
What?
I said profit and loss for those that don't know what P&L means. I feel like I have to throw that out there because I've ran into quite a few people like, yeah, can you send me your P&L? And they're like, what? So I like to make sure we define it as well. P&L, profit and
Yeah,
loss.
no, absolutely, absolutely. So as far as the P&L goes, right? This is where we're recording all of our revenues. What comes in, what goes out, and what's left over, right? Three main buckets here. You have your gross revenue, your cost of goods sold, or your cost of delivery, essentially. Your operating expenses, all your standard general and administrative. Think legal. Think salaries. Salaries are actually not part of cost of delivery at the P&L level, contrary to popular belief. Your office expenses, your utilities, all down there in that OpEx bucket. And then you have your EBITDA, your taxes, and your net earnings at the bottom. So get used to looking at a P&L. I promise it's not as scary as the first time you open it up. It's going to be one of your most used tools and best assets to you to understand what's actually happening within your organization.
Love it. Schreiber had a quick question. I don't know if you we can come back around here in a second, but Schreiber said with accrual, how would you handle someone that's paid on rev share or profit share based on having unpaid invoices? Seems like cash flow would get weird.
Yeah, no, and this is more of a terms question than anything else, in my opinion. Just make sure as you're paying things out, obviously there's a look back period that you can reconcile against in terms of like, hey, this isn't going to be paid out until this quarter's financials are finalized, just so you actually know what's going on, right? Or even that month. I think that would be the best way to go about doing it, just so you're not paying, tons in profit share only to find out that client's never going to pay. Right. So we'll want to make sure the terms of that are handled appropriately more so than anything.
Yeah, true. Michael said P&L question mark. Josh receives nude pictures. I only
Hey,
send nude
Michael, let's keep it
pictures.
PG here. Okay. This
Yeah.
is
I
for all
I
ages.
only send nude pictures, Michael. All right. So check your inbox. Adam, AP, love seeing Kurtz dropping these bombs, baby.
Don't
Love
hype me up.
it. Love it, man. Cool. So P&L first statement. What are the other two? Because I know there's two more.
Yeah, so the balance sheet, to most people, I think the balance sheet is the most complicated statement for a lot of people. And just think about it like this, right? Net worth for us as people, assets minus liabilities, and that's what's left over, right? Our equity. Well, the balance sheet works the same way. So you're going to have your assets, your liabilities, and your shareholders' equity. Okay. So the business owes you something, right? So if you take your assets minus your liabilities, you're going to get shareholders' equity, or what you're entitled to if you were to liquidate the entire company, right? Now, there's a few different buckets inside of assets and liabilities. You have current assets and long-term assets, and you have current liabilities and long-term liabilities. Anytime you hear the word current, just understand that this is something that we could turn into cash or an equivalent in 12 months or less, right? If you own a building, that is going to be considered a long-term asset or long-term liability as far as debt goes on that, right? Because we're not going to be asked to pay off our whole building in the next 12 months. It's probably a 30-year loan, right? So just understand that's going to sit differently in your balance sheet.
Hmm.
But the main thing here is that the balance sheet balances. So assets equal,
Crazy.
yeah, wild, right? Assets equal liabilities plus your shareholders' equity, right? So that's the main thing. If your balance sheet doesn't balance, you need to talk with your accountant and they need to fix that. So make sure to do that. Michael, I see you say makes sense. Been on the fence with accrual lately. Switching to accrual. Yeah. Also, if you want to ever exit, think about this too, right? Like every time your payment gets pushed into the next fiscal or calendar year, right? If everything isn't being recognized as it's happening, you might be missing out on, take 50K even in net profit that might have been pushed into the next calendar year, and they're looking at like trailing 12 months for your valuation. You may have just missed out on like $500,000, depending on what multiple your business is trading at in valuation, because it's falling outside of the period because you're on cash accounting. So just keep that in mind too. Little things like that make a big difference.
Mm.
Schreiber says an unbalanced balance sheet is an unbalanced sheet. Wow. You missed your calling, bro.
My man's a straight poet over here, man.
I love it. Okay. And then lastly, for statements, the last of the core financial statements is going to be your statement of cash flows. Okay. And there's 3 sections on your cash flow statement: cash from your operating activities, cash from your investing activities, and cash from your financing activities. Now, agencies, pretty simple businesses, you're going to mostly be looking at cash from operating activities, meaning what are we receiving for our services? What's going out the door to provide our services, right? Cash from investing activities, this could be from selling off assets or things like that. We don't really have many hard assets that we're, selling inside of an agency. Also could be if we invested in other companies, what cash are we receiving from other businesses? So if you have a holdco or like a roll up of agencies, this would be more applicable to you, but not if you just have, a single agency. And then last, we have cash flow from financing activities. So this is either issuing shares or borrowing money. We would have that appear at the bottom of our cash flow statement. And at the bottom of the cash flow statement, shocker, it shows the net increase or decrease in cash for the business. If we're growing, I'm hoping this number is increasing every single month as far as building up our assets, right? In which we recommend having 3 to 6 months cash or burn on hand, so that if you lost all your clients, you'd be cool for 3 to 6 months.
Yeah. Nice. And as far as like, I know you've put some time into this type of study, Kirch. What are some good resources for someone to like kind of learn a little bit more about this? Of like where should they kind of start?
Yeah. There's a really good video on YouTube actually. And it's like not a cartoony video, but it's from Bill Ackman, who runs one of the most successful hedge funds in the world. And he explains the businesses' financial statements at like a second grade level. And I would recommend going to watch that video. If you type in Bill Ackman financial statements, I guarantee it'll pop up right away. But if you want like the most foundational level, another great book I really like, it's called Warren Buffett Accounting. These guys study, they're also hedge fund managers, but they've studied Warren Buffett for a long time and how he analyzes companies at the financial statement level, which is the less important part, in my opinion, unless you're a big, stock person. But just the fundamentals that you learn about accounting and what all the different metrics are, all the different ratios are, financial health metrics, how to read things. That book is a wealth of knowledge. I think I have it here on the shelf somewhere. But it's by I think Stig Broderson and someone else, if I'm not mistaken. So
okay, cool. Schreiber said my total liability in equity is 340K. Is that ass cheeks?
I'm hoping most of that is equity, Schreiber. If you got 340K in liabilities, I'm wondering what you're spending money on. But
golfing.
Golfing. He bought a course. He must have bought a golf
he
course.
bought a whole course.
Yeah. So, books are great. The good thing about accounting, unlike lead gen tactics or things like that, the fundamentals of accounting don't change.
Yeah, for sure. Schreiber said it's a combined item.
That should be split out, my friend. There's definitely a version of that statement that will be split out for you. Shareholder equity is negative. I mean, if you're distributing everything from the business and you don't have a ton of cash reserves, then you definitely could be negative on the equity side because there's not really any assets to compensate for the liabilities, because all your equity is your assets minus your liabilities. So just keep that in mind. Like if equity is not where it is, either there's not enough assets in relation to liability. If there is, then I would talk with your CPA. Let's make sure everything's like categorized correctly.
Does he uses an ecom CPA for bookkeeping? I mean, that should be fine still. I mean, the agency business, I think, is more simple than an ecom.
It's definitely more
business.
simple. Yeah. Don't have to account for inventory or anything like that.
Yep. Liability is
Okay,
133.
there it is.
Because he got what?
Two whips on the biz.
Hey,
What do you
man,
got? Put it in the chat. What cars you got?
put one on there for me, bro. Come on. Oh, I love it. Cool. What else, Kirch? Like, what else are we missing?
Yeah. From here, really just make sure that you have these 3 statements each month that you're reviewing, right? Now we can get into some of the nitty-gritty stuff that are precursors to financial statements. Okay. We want to look for the leading indicators, right? The P&L, in my opinion, is a lagging indicator of that month's activity, right? So we want to be looking at what can we do within each month to better our situation, and what can we pay attention to make sure we like what's on the actual financial statement at the end of the day. So first things first is going to be your gross profit margins as an agency, right? So ideally, for most agencies, we're going to want our gross profit margin above 70%, right? So that means less than 30% cost of goods sold. Now, when we're talking about this at the project level, and I want to go a layer deeper here, we need to look at this at the project level with each client before we can get to the whole, right, of our gross margin. Because at the end of the day, our gross margin is just made up of all of our clients put together, right? So we want to be thinking at the individual project level. Now, what goes into your cost of goods sold, right? In the agency business, these are all your pass-through expenses, right? So if you run ad spend through your books on behalf of a client, which I don't recommend because it's an accounting nightmare and a liability nightmare. What if they don't pay you? That's a lot of cash to float depending on how much spend you're running through those accounts, right? So
really nice for the Amex points, though.
Yeah, not worth it. No,
I'm flying for free, baby.
Not worth it. So ad spend, these are going to be locations, models, talent, camera rentals, all of your 1099s, all your contractors go up here, because guess what? They don't work unless there's client work that's being completed, right? It's not like they're getting paid unless they're contractors being treated as a full-time employee, which is a different story, right? Yep. But that said, they're all going to go in your cost of goods sold as well, right? Now, for the sake of pricing projects, I take all my salaries, like people, including myself as an owner working on a project, and put some of that up into my costs to price off of. But understand, like I said on the profit and loss statement, all those W-2s are going to be down in operating expenses, right? So just understand from a price to a P&L standpoint, that's going to look a little bit different. Which, by the way, if you're interested in a pricing workshop on how to price appropriately, just shoot Josh a message. We'll send it over so that makes sense. Don't have
your message. He'll send it to you.
Doesn't have don't have enough time to go through that whole exercise as well on this call, but that's something worth taking a look at.
Yeah,
so
for sure. Yeah, if you guys want a more in-depth training, just shoot me a DM. I can send it to you guys, or I can always I'll link it tomorrow in the description of the video.
Perfect. So we have gross profit margin, most important in my opinion, because if you don't have that much cash to operate with after you subtract out your cost of delivery, it's going to be really hard to be profitable, right? Because we still have all the operating expenses that come with running a business. So going to pay attention to that. So meaning our cost of goods sold is less than 30%. All right. As our net margin, or I'm going to say EBITDA margin, just because that's more consistent with how everyone lives in different tax jurisdictions and all of that. So EBITDA is going to be the best metric for this. Fancy way of saying pre-tax profit. Ideally is going to be over 25%, right? understand that 25% as a digital agency is quite good, right? At the largest levels of agency scale, we're talking like Omnicom, WPP level holding companies, they're like 11 to 15% net margin, right? So like not a lot, but just insane volume. So they're still making billions in profit, right? But as a lean, mean digital agency, greater than 25% is what I would be shooting for. It's just way too much work to make less than that, in my opinion. A lot of our agencies that we work with are, some are north of 40, 50% net,
Yeah.
right?
It's not uncommon.
Yeah, not uncommon. Depending on what size team you have, and also depending on where your labor is sourced from, right? Understand the higher margin you have, the slower you're probably growing. I mean, you're making a ton of cash, but you're probably not growing top line very much. And this is where it kind of becomes like, what's important to you, right? Do you want to grow faster and have compressed margin, or do you want to grow slow and have a ton of margin? That's up to you. So I won't really give too much prescription on that, but above 25% is what we're looking for. Okay. If you have an office, recommend under 10% of your gross revenue, right? No reason to be balling out on an office. Very hard to make room for, and you just have this fixed cost every month that's kind of ugly, that comes out no matter what. And I don't love a lot of fixed costs, right? Because it's very hard to change.
Yep, exactly. Yeah, the office is a big one, man. Like people don't realize it's like, oh damn, that hits every single month.
Yeah, I remember at my last agency, 15K a month, just
Yep.
doop,
Yeah,
doop.
I think ours was like 8K. We
Yeah.
we had we had a pretty jank office space for a minute. We got it all redone, but it's like we rented it and we redid it ourselves. Probably a horrible decision, but it was a dope office when it was finished.
It looks way sexier than it is when you look at your financial statements.
Yeah, yeah, right. For sure.
Everyone better be enjoying every minute of it.
Yeah, exactly. Yeah, the culture better just be through the roof.
Yeah, that ping pong table better solve all of our
I'll
culture
tell you
problems.
what. I'll
Okay,
tell you what. The ping pong table was clutch, man. It was
uh,
a good time.
that's funny. That's funny.
Trevor
So
said net is down this year because we started paying 100% medical benefits.
hey, you're gonna get a lot better talent now that you're doing that, because you know a lot of agencies, and we had this benefit. We did cover medical eventually, but we hired really young people that either had their own insurance or were still on their parents' insurance in some cases. So like we had to either increase comp to compensate for people who needed health insurance, and they had to get it on their own. But I view that as a net benefit, even though your profit's down. That's great.
Yeah, you just make pay cuts at that point when you bring on benefits. Yeah.
So actually you're going to get paid the same as you were, but you're going to receive less money. I'm sure
It
that
nets
goes
out.
over
Oh yeah, that'll go over great.
really, really well. Cool. So a couple other metrics that we can look at, just business health metrics. One of them is called the quick ratio, or the acid test. And really all this is your current assets divided by your current liabilities. Okay. So this means everything that we have or could have in 12 months, and everything that we need to pay or will pay in the next 12 months. Right. So when we divide these two together, ideally that number is over one, meaning that if we had to, all of our assets cover our liabilities, we're not in the hole, and we don't have to bring on any debt or investor financing to cover our obligations. I'll just say, as an agency, your liability should be like like close to nothing,
0.
realistically. Like I don't know, apart from like what Schreiber said here, if you have a couple automobiles expense to the business, like that's one thing. But apart from that, I mean, it's not like unless you own your building or your office space, then that would be the only other thing I
Mhm.
would say. But if you just have a ton of credit card debt looming out there, get that cleaned up for sure. Cool. So asset test, super easy one. Current assets over current liabilities. Next, revenue per employee. This is one I'm very cognizant of and bullish on. total revenue divided by total full-time employees, including yourself. And really, this is a good gauge for how efficiently are we using our talent, right? So if our revenue per employee is 50 grand, they might not even be paying for themselves in certain cases. Like if you pay your employee 50K and your rev per employee is 50K, you're basically breaking even on your employee, right? That's not the goal, right? And with agencies, we sell labor, we sell skilled labor essentially, and we do things for people. We provide results for people. So understand your rev per head is going to want to float around 150 minimum, up to 400K in the most extreme cases of people who really have it figured out. And a lot goes into this, right? What we charge plays a huge factor in this, because the more we add to total revenue and the less people we have to support that, obviously the number is going to be higher.
Mhm.
Now, if you're looking for good ways to improve this number, if it's not where it needs to be, and by the way, look at this on like a 6-month or a yearly basis, right? If you want to improve this number, think about things that you can offer with a low cost of delivery on the labor side of things. Okay. So, good example of this would be if you don't have a downsell in place for prospects who are unqualified, get one in place, because really you create it once, you can sell it an infinite amount of times. No one really has to spend time delivering it. So all of that's just getting added to total revenue without any need to improve, to add more employees, right? Or if you restructure your systems, your fulfillment systems, right? Maybe we don't need as many employees as we have right now, or maybe we can get 50% more capacity out of our employees. That's one of the biggest things that AI does for agencies that use it effectively. I just need less people to get the same amount of work done.
Yeah.
So I'm generating more revenue or the same revenue with less headcount, right? So that number naturally will go that way. So if this is low for you right now, understand that this is a symptom of a deeper root cause that we need to solve, right? This is one of those metrics where you kind of see it and you're like, okay, there's some stuff going on we need to investigate, right?
Yep, exactly. And this is where the classic operators come out right here and dive into the inefficiencies, dive into the pricing structure, things like that. Like this is the metric that I love the most, is like I want to see that revenue per head just climb.
Yeah. Yeah, absolutely. Because it's just it's a good feeling, and also realize the people you do have, you're going to be able to take a lot better care of, right? Financially, because you have way more revenue to play with, and it's not all going out to people, right? So just keep that in mind. Something that ties into this as well, salary load is a percentage of your revenue, right? So salaries, main cost in any agency, hands down, right? It's a people business. We sell people's time, like I mentioned before. Understand that we want to keep this number under 50%, right? And the reason I say that is, think about if you have 50% labor, then you have 30% operating expenses. Well, hopefully you're left with 20% profit at least, right? So
Minimum.
yeah, exactly. So labor is the biggest bucket that we can shrink. If OpEx is your biggest bucket, you might be overspending on OpEx, quite frankly. People should be your biggest expense if you have an agency, right? So just keep that in mind. Our most successful, most profitable agencies have a salary load as a percentage of rev anywhere from 15 to 25%. Once again, these are agencies that have been optimized for cash flow. It is okay if you are in growth mode to be towing this line of 40%, 50%, right? But if you are just in cash flow optimization, then we might want to look at optimizing that, right? It's always the trade-off between growth and profit, always.
Peter had a question here. Should the revenue per employee include myself? So I shouldn't hire anyone until I hit 400K per year?
So rev per employee should include yourself. However, I would not recommend waiting till you get to 400K ahead, because realistically, the way you're priced right now and your overall business structure, you might never be able to get to 400K ahead before you, like, you'll be working 80, 90 hours a week. Like, it is possible to hit 40K a month with your agency as a solopreneur. That's gonna suck, right? So,
Yeah.
yeah,
You're
so
I haven't seen anyone do that before, right? We're talking, like, at a little bit more scale. Like, here's the thing is, like, when you are a solopreneur, you are entering into growth mode from the beginning. Like, you are pushing growth from the beginning, and so those early hires, like, this is as we start to grow a little bit more, we have a little bit more revenue under our belt, and at that point, it's like, yeah, we should have a little bit lower revenue per head when you're just getting started. But we're talking like agencies that are really starting to find that traction. They're more moving into like what we consider like a scale or stabilization phase, and we are at that point of like, hey, let's go ahead and bring more profit in to the bottom line. So if you're really stabilizing as an agency and you're really pushing towards like Nicholas said, more cash flow, more profit for the business, then you might have 200K to 400K revenue per head. But
yeah.
in like major growth mode, like we want to stay above 150, I would say, right, Courage?
Yeah, I would like if I'm in as aggressive as possible growth, I'm toeing the line probably at 150.
Yeah.
Like I might even go a little bit lower than that if I'm really trying to just grow as fast as possible at all costs, depending on how the rest of my numbers look. But
Yeah.
yeah,
When I mean, that's personally like that's not how we play the game. We like to protect profit margins. It's just one having that buffer and understanding, like, hey, we're gonna bring in profit and like even like a worst case scenario, is a really good feeling. There's like a lot of security in that, and for us, like Nicholas and I are of the mindset we're not gonna trade peace of mind for rapid growth. Like we're gonna grow, but we like growing on kind of like our terms and yeah, like the trade-off is at a little bit slower pace, but the stress levels, like I don't know, we've done it, we've done
that,
that
that I think
pace.
that's the real reason we've done
yeah,
it
we've done
the
that
other
pace
way.
before, and it's kind of a nightmare, and it like look, I lost all my hair, bro. Right? It's like that is the byproduct of running an agency that way. Good learning lesson for sure. It was fun, but it is more stressful.
Yeah. Okay. Peter says so 12.5K rev per month per employee, about to be 30K a month per employee. Okay. So yeah, you'd be at 360 a year, man. Uh, if that were the case, per head, if it's per
Yeah.
month. So that's more than enough.
Yep. Agreed. Man, Michael, we'll always have you back if you miss us.
Come on now.
Anytime. Anytime. You let me know.
We miss you.
Cool. What else, Kirch? Anything else?
Um, yeah, I think overall, keep an eye on your monthly overhead. This is something that can easily get away from you, the operating expenses, the credit cards, the meals and entertainment, all that stuff. Just make sure you're looking at your credit card statement. Also, a fun activity that I did personally, probably like 6 months ago, is I found about $400 to $500 a month of software subscriptions and just subscriptions that I pay for that I never use. And then I'm like, okay, that's 5K a year I could save. And if I invested that and it compounded at 7% a year, I just missed out on like $1 million basically by the time I retire from these pesky little subscriptions. So make sure you go through and you audit those expenses and just do a monthly clean out.
Yeah.
No,
Mike
I
McAllowitz has a good exercise from Profit First. I think it's Profit First. It's called the print and mark exercise. So
ooh,
if you're not familiar with that, check that out. It's a good one. You could probably just YouTube it or Google it, and it would come up. But print and mark exercise. You print out all your statements and you mark the statements up based off of things that you want to keep, things that you can replace with a cheaper option, or things that are obsolete.
great tip. Yeah, it's another great book to read. Profit First, something we sell
Yeah, I
pretty
mean,
good at home.
it's so funny. Like ever since running Hydra, that is the system that I used, and it allowed us to one stack cash really effectively, and us not let our operating expenses exceed what they needed to be at the time. So, really great. Like if you're like just learning finance, if you're just getting into business for the first time, that is such a great book, and like you will stay very safe if you just follow those guidelines.
Yeah. Yeah, great point. As far as keeping it simple, though, what we just went through is probably where I would draw the line. I mean, there's tons of different ratios and metrics you can look at, and you can make it as convoluted as you please. But in terms of the fundamentals of running a good business, if your financial ratios are in check in terms of how much of my revenue is going to salaries, what do my gross margins look like, you should have a good amount of money left over at the end of the day. There's no real need to make it more complicated than that. So, yeah, that's pretty much all I got in terms of
Yeah,
metrics that I would be paying attention to.
love it. You guys drop some questions in the chat. We got couple minutes here. We can answer some questions for you guys. I'll do the chat overlay as well. That way we can see the new chats coming in. So drop a couple questions for either finance or even general broad questions on anything agency related. It could be about lead gen, sales, fulfillment, HR, something more on the financial side as well. So let us know what your questions are. We're happy to answer them here for a few minutes. But real quick, as the questions are coming in, Courage, plug yourself real fast. Like obviously you and I work together. But what else do you have going on right now? Anything that you're wanting to plug?
Yeah, totally. So lots of exciting things going on at Hydra. I'm going to take a moment. I'm going to just plug us because if you struggle with anything that we went through here, we would love to help you and serve you in any way possible. But apart from that, I actually am launching a podcast called the Ask an Operator podcast. It'll be going live in the next couple of weeks, and my goal with that is to really interview some of the brightest business minds and focus less on, backstory or things like that. It'll be really well researched, but I really want to get into the nitty gritty and tactical stuff that I don't think really sees the light of day. So if you're looking for something super entertaining, it's probably going to be lighter on that side, and it's going to be more heavy on like, okay, how did this person do this and why did it work? And how can I learn from their mistakes? So really excited to launch that. And yeah, watch out for that in the next couple weeks. Otherwise, you
Nice.
can follow me on Twitter at Kirchner without the E, because
Without the
someone
E.
took my handle. It's
I
like
love it. I love it.
it's like an account that hasn't posted in like decades.
It's the worst. It's the worst.
Yeah,
Cool.
horrible.
One question coming through here. Peter asked, how much revenue should be going to salary? I might have missed that.
Yeah. So Peter, you're going to want to go under 50% of revenue to salaries. The most profitable ones that we see, 15 to 25% of revenue goes towards salaries. So once again, if you're in growth mode, probably going to be closer to that 50%. If you're in cash preservation / profit optimization mode, ideally closer to that 25%.
And a common follow-up to that too, Kirch, is does that include my own distributions, my own salary? I know we already covered it, but just
Yeah.
as a recap.
Yeah. So it doesn't include your profit distribution. It does include the salary you pay yourself, though, because I want an accurate picture. If I ever wanted to hire an operator to fully remove myself, one person who's done a great job at this is Michael, for example, who's on this call right now. You're paying that person money to be able to take the reins. So I want to know what that picture looks like. And it's just good to include myself. We're employees of the business just as much as we are owners.
Yep, 100%. Cool. I don't see any other questions rolling through. Kirch, man, thank you so much for coming on. I know
Thank you,
that
man.
you have a busy afternoon today, so appreciate your time and energy. You guys, thank you so much for coming along. Go follow Nicholas on his Instagram, Kirchner at Kirchner without the I in it. So go follow him if
Without
you
the E, bro. Come
or
on.
without the
Without the
E.
I.
Oh, without the E or the I or something like that.
Yeah.
Check
My
out his
business partner
podcast.
doesn't know how to spell my last name. It's fine.
Well, I know how to spell your last name. There's an E at the end, right? An
I
ER,
just
right?
I just have to give you a little crap.
I love it, bro. Awesome, guys. Hey, we'll see you next Thursday. We'll be back on you know what time every single Wednesday, 7 p.m. Central Time. And we'll see you in the next one.